Hey guys, welcome back to another Trading Edge video, your weekly look around the markets. If you guys are brand new, my name is Akil Stokes. I'm a Forex trader as well as a trading coach over at tier1trading.com. And this is a video I post here on YouTube each and every week, sharing with you the best trading ideas that are on my radar for the week to come. And today I've got 8 brand new trading opportunities to show you. So let's get started on the euro dollar. We're going to start here on the 4-hour chart. And this is going to be essentially just a structure-based trade. You can see the euro dollar has, well, we had a nice little flag pattern here that broke out, but wasn't able to violate the lows. And we're essentially bouncing between our previous levels of structure support, which are down here in green, and our previous levels of structure resistance that are up here in red. And the most recent test that we've had in the market, if I take these VS1 levels off, is a test and hold of our upper level of resistance, followed by an inside bar, which means consolidation. If we go down to the hourly chart, this is going to offer the potential for a double top pattern, right? You can see price action rallied from our lows all the way to our highs. We got rejected, put in a little bit of a retracement. If price action can come back up to our VS1 level, or upper level of previous structure resistance, and hold once again, that will give us a classic pattern called a double top. And what you can look for is a bearish opportunity to trade the euro dollar short from that level. We also have a nice even handle number as well, the 107 even handle, which is a very key psychological number. We have RSI overbought on the first test, likely to have RSI divergence on the second test. So this makes for a pretty decent combined technical score for you guys that trade the CTS system. Next up is going to be the pound dollar, the cable. We're going to start here on the daily chart, and it's going to be a continuation off of, I'm not sure if it was last week here in the weekend trading edge, which is one of our live sessions, but if you guys remember, we were looking for a short opportunity. We had a technical break and close below this bigger VS1 level right here. And now we've come all the way back up to rally, retest the highs, and get a pretty nice hold here after touching the 121 even handle. If we go down to the 4-hour chart here, you're going to see price action came right back up to a previous level of structure resistance. Look left, structure leaves clues. We did not break and close above this level. We held this level and put a nice little rejection here once again, followed by an inside bar. So some consolidation just like the euro dollar. So if you were someone that was looking for shorts here before, if you guys remember, this was the break of our descending triangle, the break and the retest. If you're someone that was looking for shorts before on the descending triangle, perhaps a breakout and pullback trade, this is going to be a good opportunity to get involved to the downside here on the pound dollar 4-hour time frame. Next, we're going to head over to the Aussie dollar. Once again, on the 4-hour chart, this is one of my favorite setups to trade, right? What we have here is price action entering a period of consolidation, right? So directional movement is when the market is moving up, right? Bottom left to top right, or top left to bottom right in a bearish trend. Consolidation is when we're putting more of a sideways action. So the market is kind of churning and it hasn't made up its mind on which way it wants to go next. What I love about these scenarios is that although we can create a bias, a directional bias based off of the other information that we see on the price chart, in this example, we would be looking for a bearish directional bias. You can see here on the higher time frame, our most recent move was a break and close below this previous level of structure, which gives me a bearish bias. Not a really far bearish bias, but we could certainly go back down to the 65 even handle. But regardless of that, what we have to do in this scenario, what I like to do in this scenario, I should say, is I like to bracket both sides of the market because I can't trade one way or the other regardless. So what I'll do is I'll put a horizontal line of structure resistance at the top here. I will print a horizontal line of structure support at the bottom here. And now what I want to do is I want to wait for the market to show its hand. So I'm waiting for a violation one way or the other. If price action violates this level to the upside, then I'm looking for long opportunities. If price action violates this level to the downside, then I'm looking for short opportunities. So again, it's not my job to necessarily say the market has to go one way or the market has to go another way. It's my job to look at the market, do my analysis, make my predictions, and then use that if-then syntax to say, if this happens, then this is how I'm going to react. Or if that happens, then this is how I'm going to get involved. So a nice opportunity here on Aussie dollar. Overall, the bias should be bearish in my opinion, but whichever way we break out should offer a decent opportunity to trade. Moving forward, we're going to head to the pound Aussie. We're going to start here on the daily chart. And this is a very interesting opportunity because it offers two different trading opportunities, right? We are currently trading at a previous level of structure resistance. You can see that big red box on your screen. By the way, that is our VS1 indicator. Basically, it is a visual representation of structure support and structure resistance. It is available for free download when you start your 14-day risk-free trial membership on the platform. So if you want to do that, just head over to www.tier1trading.com, start your 14-day risk-free trial membership. It's risk-free because there's no auto bill or anything sneaky like that. You just get 14 days on the platform, and then when your 14 days are up, you're booted off and you can't log in. But something you can do is you can join some live sessions, you can take a few training courses, and you can download software like this VS1. So we'll start with the bearish opportunity because this is going to be the simpler one, right? The bearish opportunity here is that we are trading at a previous level of structure resistance, right? We ended the week technically breaking and closing above it. But I know some of you guys are saying, well, we only did it by a little bit, so I can still look for shorts. And that can certainly be the case, right? If you go down to the 4-hour chart and you're saying, hey, here on the 4-hour chart, right, if this is your higher time frame, you're going to see that we did not break and close above. We spiked above, but remained underneath. So this can certainly set up a potential short opportunity for you, so a chance to sell. Now, the opportunity that I'm interested in is actually going to be a potential bullish breakout. And again, the daily chart is personally the chart that I use for my higher time frame analysis, right? So I do something called top-down analysis where I start with a higher time frame. I use it to identify what the market's doing and make predictions on what direction I think we're likely to go in. Then I drop down to a lower time frame to actually look for my reasons to trade. But the higher time frame is what sets up my overall bias. And no matter what I think or no matter what I feel, I can only act off of that bias. So when I see this break and close above here on the daily chart, I identify a higher high, higher close. I predict a continued move higher. Those are the only trading opportunities that I can look for despite what my lower time frames tell me. So if I identify a higher high, higher close and I predict a move higher, the next question I want to ask myself is, where is price likely to go to next if we move higher? And the first place that stands out to me is going to be our level right here at about 187.66. We can just round it off for our purposes here and just say 188 evens, with the high zone being about 192s at the top of this VS1 level, right? We can also take things like our Fibonacci extension tool, drag it from the swing low to the swing high right here of our move, and see if we get any type of Fibonacci confluence at that level, meaning looking for a 127 extension or a 1618. You can see the 1618 isn't going to be in play at all. That's the more important of the extensions, to be honest with you. The 127 is going to be a little bit higher here at 189. So we can start bracketing a zone really between our 127 here and that 188 even handle. Lastly, we can bring in our volume tool. Let me see, Control 3. Did I get it right? I hope so. Ooh, there we go. Got the shortcut right for the first time ever. And let's see if there's any type of spike that stands out for us in this level. It's not liking me. Oops, sorry. I moved it by accident. There we go. Got it back on there. Let's see if there's any type of volume spike in that level that stands out. You can see there is a larger level right around the 127, although there was a small level right below that 188 as well. So the bigger level is at the 127, but if you want to be more cautious, 188 looks like a safer play. And we spoke about this week the differences between target profits and is it worth the risk for this amount of more profit, and how that's always an interesting decision that a trader must make. But regardless of that, because that doesn't really matter right now, we're far away. We're 600 pips away from any of those moves. Let's talk about the buying opportunity. So we identified what the market has done. We predicted where we think the market is going, or what direction we think the market is going to go in, and where the market may actually go. Let's drop down to a 60-minute time frame and ask ourselves, how can we get involved? Well, here on the 60, I'm going to delete our VS1s for a second. What we're doing is we're putting in a high and tight flag formation, right? We can see price action has spiked up here. And now we're just doing sideways movement, sideways movement. This is a great sign for a potential bullish breakout. We saw something similar right here. Had a little bit more kind of funky action take place, but it was an interesting week for the pound. But we have something similar happening here. So if you are a breakout trader, this is an excellent opportunity either to position yourself prior to the breakout, right? You could be wrong very quickly here if you're strictly trading the breakout, because we shouldn't really pass underneath this range or trade underneath this range. If you're more conservative, right? Or let's put it this way. You can position yourself prior to the breakout. That's one way to do it. You can put a buy stop above this level. Therefore, if we break out, boom, you're involved in that next pop. Or of course, you can wait for the confirmed breakout, the potential pullback. I say potential because it doesn't necessarily have to happen, and then catching the next extension up. So very good, interesting trading opportunity here on the pound Aussie. Next up is going to be the pound New Zealand. This is going to be short and sweet. We got advanced pattern formation here, right? Not a potential one that has already filled, but is still kind of trading within the realm. So our initial swing high to swing low is going to be our X to A. Our first retracement back up to the 50% retracement is going to be our A to B. Seeing that we hit that 50% retracement and we do not hit the 618, which is the upper kind of gold line there, tells us that we have a potential bat pattern and not a potential Gartley. And that's going to make the difference between where our decompletion is. Before that decompletion, we're going to need a C move, which is right down here. And you can see that our decompletion was right up here at the 886, 196.20s or 196.19s, which we technically hit already, but we did not roll down the targets yet. So we're trading a little bit below it on the close. Who knows what may happen on the open, but if you're able to get involved anywhere between the initial entry and really the invalidation point, which is the X leg or the top of the X leg right here at about 196.77. This is still a good bearish bat pattern for you to take. Of course, just adjust your targets accordingly depending on how price action, or if price action pushes up, I should say. Next on the agenda is going to be Canada yen. Canada yen is an interesting one. I'm not a big fan of the overall location, but I am a fan of the pattern formation that is forming. So our overall location, right? Overall location is right here. This is our most recent level of previous structure support, which we have tested. So that's a good sign. The negative is that, well, it's a fairly large level of structure support going all the way back down to about 96.5s, which is about 100 pips more than what we're trading at right now. So it's a very large zone. You know how I feel about safe targets. For me, it's going to be hard to place a safe target that is within this zone, because technically anywhere in this zone could be tested and not really invalidate anything. So that's the negative of what I don't like about this setup. What I do like about this setup is the candlestick formations, or for you guys in the live room, I like calling them the legs, right? You know, I like a nice pair of legs, right? Where we have a high momentum bearish candle right here, with which is a big bearish candle, which should show you signs of selling. But if we're really digging into the candlestick, we have to look at the full story. And the story is that, yeah, big aggressive sell, fell off the cliff, falling knife, all of that fun stuff. But to end that session, we saw a fair amount of buying pressure. It's still a strong candle, but that wick shows you that there was buying pressure here at the lows. And remember, buying pressure is a combination of, well, target taking from some of the sellers that sold at the very highs and are looking to make some money. Buying pressure is also new buyers entering the market, because remember, we're at a previous level of structure support where we've seen the same exact thing happen in the past. To follow that up, we have not only an inside bar, which shows us consolidation and a little bit of indecision, but an inside bar, despite being red, it's a technical bearish candle. We look at this as being a bullish candle because it is a weak bearish candle, meaning that at one point, price action pushed all the way down to the lows again. We refused to test the lows of our previous candle and got rejected very similarly, but this time finishing in the upper third of the range. So I would still need confirmation on this, right? A higher high, higher close would be a good sign of confirmation. But if we do get some signs of confirmation here, we can look for a deeper pullback, a deeper area of relief, certainly to this inside level of structure right here around 98.20s, and probably even higher to about 98 evens, maybe even, or 98.80s, even the 99 or 99, yeah, even handle number right here. Sorry, it's late night, long day with the kids. Trying to get this video out so I can get to church tomorrow instead of missing it like I have been the last few weeks. Speaking of which, if you guys are enjoying the video, please take a second to hit that like button. It's the best way you can show me love. I do take time out of my busy weekend to record this video for you guys. It's about a 15-minute video usually, but it takes about 2-3 hours to produce. But I know you guys enjoy it. It's something that my trading mentor did early on in my career that I thought was very, very helpful and gave me kind of these weekend reminders of trading ideas that not only can I learn something from, but also compare my own predictions to. And my job as once I became a consistently profitable trader has always been to give back, and I want to be that person for you that my mentor was for me. So if you hit the like button, it shows me that you love the videos. It shows me that you like what I'm doing. On weeks when I wake up and don't really feel like doing this, it kind of motivates me and inspires me to actually not be lazy and do it. So smash that like button. Of course, if you're brand new, make sure you're subscribed. Now we're going to take a look at the Canada Swiss here on the daily. You can see Canada Swiss broke out of a really long range of consolidation. We started consolidating here mid-December and just broke out mid-March, or I guess early March you can say. And it looks like we're in the middle of no man's land. We're going to have to scroll back all the way to... what is this? April 2020, March 2020. Ooh, that wasn't a good time at all. Where we find our most recent structure lows. Now, again, pretty significant lows here. Not only our next major level of outside structure here on the chart. I'm not sure if they're all-time lows or not. But we also know that these lows were formed in a very interesting time in the market, interesting time on this planet. If there's going to be an area for profit taking, if there's going to be an area where new buyers are interested, it should be down here. So this is a longer term trading opportunity. We have breached that zone. Start looking. You don't need to be impatient. You don't need to rush and do it right now, but put this on your radar. Start looking for signs of potential reversals. There could be a lot of meat on the bone here. Sorry, I'm pushing buttons and hitting stuff that I shouldn't be hitting, but there could be a lot of potential meat on the bone here for a bullish trading opportunity back up to our previous level of inside structure here. So keep an eye on Canada Swiss, certainly this week, but probably over the next few weeks to see how far we get into that zone. I would love to see a continued move down, a test of those lows, a hold similar to what we looked at on the previous pair. That would be a very positive sign that we're ready to kind of bounce back up. Aussie Swiss on the daily looks similar, is a little bit similar in the fact that we broke, not the same type of level of consolidation, but we broke out of a previous level of structure support, and we're trading in the middle of no man's land. The difference between this and our Canadian Swiss is that in this scenario, we actually are trading in the middle of no man's land. You can see that we don't have our next VS1 level. We don't have our COVID lows down until, under 57s. We do have a level of inside structure here that I would pay attention to. So I'm not as aggressive to say that we should shoot all the way for here, but this is certainly a continuation opportunity. Real quick, I just want to take our volume indicator here from our swing low to swing high, see if anything pops, kind of give you an idea of where you can look for in that level, right? And just as I noted out right here, really the top level of that consolidation, let's say about 59 evens, is where our volume starts to pick up. So that can be a decent level to eyeball right now for potential shorts. Now, before we have those potential shorts, and this is why I'm not too concerned about the target profit level right now because it will change, but before we have those potential shorts, we're probably going to get a period of relief, right? We just broke out of a previous level of structure. We saw some buyers get knocked out the market. We saw some selling pressure take over. we are certain to have some type of relief, either a small relief where price action does a little bit of consolidation like that before perhaps moving down to its ultimate destination, or a bigger relief where we come back up to test our previous level of structure support, which we would now act as, or expect to act as, structure resistance, right? But it's early on in this, which is good because that's when you want to start forming these ideas, running through that if-then syntax, flipping through the virtual pages of your trading plan and asking yourself, okay, what type of opportunity is this? Pullback trade. How do I trade it? What do I need? Those are the things we want to start thinking about right now. That way, if the trading opportunity does occur, we're not caught off guard. We're not in the panic mode. We're not in the FOMO mode. We're able to stick to our rules. We're able to trust our plan. We're able to trade our plan. And that's something that consistently profitable traders do. Hope you guys enjoyed the video. Tier 1 members, we're going to take a look at the DKC strategy in Monday's Q&A session. Just remember, we do have that time change where we're putting our clocks an hour forward here in the US. So make sure you know the proper conversion. And remember, Trading Coach Podcast, 3 new episodes each and every week, available on your favorite podcasting app. Take the 10 episode challenge, meaning scroll through, find 10 titles that sound good, sound appealing to you, give them a listen. These episodes are short and sweet, usually about anywhere between 8 and no more than 20 minutes, but see if it's helpful to your trading, see if it's helpful to your personal life, and if so, become a regular listener. All right, until next time, plan your trade, trade your plan. You guys have a great weekend. Everton, I love you. Liverpool, do your job. Come on.